In this video, I will be talking about problem 410 in your homework, where we're looking at financial data that corresponds to Clayton West Energy's 2015 income statement. Now, the problem with this, or the challenge with this is just partial and it's not really in the right order. So in order to really understand how an income statement works, I wanted to show you the whole thing from your book on page 59. And before I did that, I believe I misspoke in the last video and I said that EBIT stood for earnings before income taxes. No, the I stands for interest. So this is earnings before interest and taxes, and this EBT is just earnings before taxes. So the EBT is going to be less than EBIT because the earnings before just taxes means that we've already subtracted out our interest payments. Okay, so if we're looking at the income statement and we want to know what our gross profit is, we simply take our net sales. That's where it always starts. Put it right here. It always starts at our net sales, or we could also call that total revenue, and we subtract the cost of producing the goods that we sold. And in this case, net sales is 15 million. The cost is 5 million. So the gross profit is going to just simply be 10 million, the difference. Then we want to know what the operating income is, or once again, the earned income or earnings before interest and taxes. And that's going to be simply we're going to need to take our gross profit and subtract from that our total expenses. And that's going to give us our operating income right here, or earned income, or earnings, I should say, earnings before interest and taxes. Then in order to get just our earnings before taxes, we need to subtract from that our interest expenses, and that's going to give us our earnings before taxes. And then to finally find our net income, we need to subtract whatever taxes we paid, and in this case the tax rate is 42%, so we just simply take 42% of our earnings before taxes, which happens to be $2,306,000, is 42%, or roughly 42%. It's not quite exact, but they rounded this off. But anyway, roughly 42% of the income before taxes. We subtract that and we get our net income. So I'm going to stop there. So that's just basically how an income statement works, moving from our net sales down to our net income. So in order to do our problem, I'm going to take this, I'm just going to copy it and then scoot this down, put this right and get that out of the way, put that right here, and let's just run through this. So the first thing we need to find is our gross profit, and that's going to be sales, which is down here, minus cost, which is up here. So that's why I was saying this is sort of out of order. So we want to subtract cost from sales down here, and that's going to give us our gross profit of $240,000. And then we want to get our operating income, or earnings before interest and taxes, and we do that by taking our gross profit right here and subtracting from that our total expenses here and here. Our selling and administrative expenses and our depreciation expense. And that's going to be, so we subtract out 40,000 and 85,000, and that's going to give us our operating income down here of 115,000. Then we need to get our earnings just before taxes. In order to do that, we need to subtract out our interest expense right here, which we find up in our financial data is 40,000. So we subtract that from our operating income, and we get a earnings before taxes of 75,000. Now we need to compute what our income taxes actually are, and that's simply by taking the tax rate, which is right here, 40%, and multiplying that by our earnings before taxes, and that's going to give us the taxes that we have to pay, which is 30,000. And then in order to get our net income, we simply subtract the taxes that we have to pay from our earnings before taxes right down here, and we get our net income of 45,000. So that is how we do problem 410.